Hello everybody, welcome back to the Black Forex Academy channel, where we discuss the fascinating world of trading on a daily basis by dropping content like this. In today's video, we're going to go over the trades week, a weekly recap. We're going to go over all of the trades that we took in the previous week. And the reason I'm doing this is because we only took a few trades. We only traded like 3 days the past week, not a lot of momentum, but we ended up having a profitable week. So we're going to go over this week, see what we could have done better in order to increase our gains, and that will hopefully give value and make you become a better trader. So if that sounds interesting, please do stick with us until the end. Don't forget to subscribe. You know what to do. Share with a few friends that you believe will find value in this video in it. Cool. So I'm not really going to go over the trades specifically, the one, the second, the third. I'm just going to go randomly pair by pair. This week we only had a couple of trades in 3 pairs. Euro USD, we had the most number of trades. We had 4 trades on Euro USD. So I'm going to start with Euro USD, and then we have Euro JPY and CAD JPY. Those are the only pairs that we had trading opportunities with this trading week. So we're going to go looking all over them and see the trading opportunities we took, what we could have done better, what we could have done, to increase our gains in the market. So we're going to start off with the first trade. This was the first trade of the week, actually. We took a Euro USD sell. Obviously, prices were ranging here, and then we saw prices break and close below this level. This was indicating that there's a change of structure and prices will have a very high probability of keep on pushing lower. So I understood, like, if this low has been taken out, most likely prices will keep on pushing lower until this market structure down here. There was a market structure down here that I was actually aiming for. You see this green line? That's what I was aiming for, right? Okay, never mind. It looks like it's far away. So I was aiming for those lows, and then I took my sell, placed it there, my stops above that entry candlestick. Obviously, we were risking somewhat of about 23 pips. Prices went our direction all the way until 26 pips, right? So that's over 1 hour. Obviously, I told the people in the groups to go break even and close the trade. The reason I said to close the trade was because I saw the markets as if they were kind of losing momentum, and I didn't really want to, let a losing trade go to waste. So we closed our trade, and then obviously after that, prices went back to break even. Had we not closed the trade, we would have been stopped at break even and not made anything. So right there, we secured 1 hour, and then it was kumbaya. The second trade on Euro USD was this one right here. This was actually, so after I talk about the trade, I'm going to delete it. So this trade was initiated after prices bounced off this structure here, and then it was actually a retracement to about 0.5 Fibonacci key level of this whole wave. So obviously you do know I use structures and Fibonacci key levels. So I was like, okay, if prices have retraced about 0.5 of the whole wave move, we have a very high probability of prices to keep on pushing lower, right? And then that's what happened. Prices started pushing lower on Euro USD here. You see we got that bearish crazy momentum. So after we got this doji bouncing off the 0.5 Fibonacci key level and closing with a doji indicating a lack of momentum, I was like, okay, we might be having a trade here. So the following candle was bearish engulfing, and that's when I pulled the trigger. In this trade, we were risking just about 17 pips, and then prices went all the way about 29 pips in our direction. So it was about 1.5 hour, right? So in this situation, prices actually broke below this structure here, right? Prices broke below this structure. So once prices were down here and then they closed with the doji, I had a decision. Do we close the trade or do we let it ride? And because prices had broken below this structure, I was like, okay, let's just let it ride. Because prices have broken the structure, there's a very high probability that prices will just retest and keep on pushing lower, right? So unfortunately, prices came back with a very strong bullish momentum, and then went all the way ahead of stop loss at break even. So in this scenario here, what we should have done is that, okay, prices have already broken below this structure, sure, but we don't know if prices are still going to bounce off here. So what we need to do is actually secure at least half the trade. Not fully close, but half the trade, because prices have already broken below this structure. So if prices come back here and they start selling again, we'll take another entry. That's what we should have done. So this trade was a great trade, beautiful trade, gave us great returns, but we didn't capitalize on them. So we let about 1.5% go to waste, 1.5 R go to waste, right? So that's what I learned from this lesson, from this trade, is that once prices break below a structure and then you see they're losing momentum, close half the trade. In case prices come back to your structure and then they start selling again, you'll have another opportunity to take another sell, to add on another trade. Because in case it doesn't do that, like it did in this trade, guess what? You'll have made something down here. So that's what I learned from this type trade. And, you know, it's all good because we didn't really lose anything at the end of the day. So yeah, we just gained a lesson. So we have this, another Euro USD trade. Prices, after pushing all the way back here, came back to this structure, you know, and then started selling again. I was like, okay, cool, we're going to take another sell again, because I'm relentless. I believe Euro USD, the trend was bearish. It was just looking for volume, and then it found volume up here again. So prices started selling lower, pushing crazily bearish. And then once they reached down here, obviously because of what happened, I think I was a little jumpy. Because the first trade, if you remember it, we secured at 1 hour and then it stopped us at break even. The second trade, we didn't secure anything and then it stopped us at break even. So the third trade, prices were floating at about 2 hours. I was like, okay guys, look, let's just close the trade, because obviously the New York session was about to end. Obviously the Asian session, God knows what happens in those sessions. So I was like, let's just secure the trade. Let's just close this thing, eh? Let's secure a 2 hour, and then tomorrow come, we'll look for other opportunities. We did secure 2 hour, which was a beautiful gain. You can't complain. 2 hour, that's a beautiful return, right? But had I looked at the higher time frames, I would have noticed that the 4 hour candlestick was massive. Look at this massive thing right here. Look at this massive 4 hour candlestick. It was insane. This was a great indication that the bears have a very strong momentum, and it's most likely going to keep on pushing lower because they just broke below these 2 4-hour structures, right? Had I looked on the higher time frames and what the higher time frames were doing, I wouldn't have closed this trade, and I would have let it ride to hit our take profit at 4%. Instead, we got half of what we deserved, and we closed the trade at 2 hour, and then the trade went all the ahead and hit take profit. At the end of the day, it's a valuable lesson that we learned. Always look at the higher time frames in case you are managing, your trades. The higher time frames will obviously give you a better perspective of what's really going to happen next. So that's another lesson that I learned from Euro USD taking this trade. Obviously, I left about 2.3 R on the table. This trade, the past one, I left 1.5 R on the table. So, it is what it is, So this Euro USD trade here, we took it on Friday. It was a losing trade. The first losing trade on Euro USD. Obviously, we were looking for buys. We wanted to see prices go all the way until they hit up there. My reasoning for that was because prices had broken above this structure, gave us a retest, and I was like, okay, prices have a very high possibility to, keep on pushing high. But once we took the trade, fortunately, prices just dumped all the way until they hit our stop loss. kind of consolidated a bit and then took off about over 1 hour in our direction and then came back to dump. So I was like, okay, whatever. It did its thing. It did its thing. But how could we have prevented this loss? You know, how could we have made this trade better to prevent this loss? So on this trade, I believe I made my stop loss very tight. It was way too tight. Because if you look at it first, the stop loss is above this zone. That's not good, because what if prices come back to retest the zone to look for more buying pressure? That means I'll be stopped out. So this stop loss was way too tight. My stop loss should have been somewhere below this candlestick where we used as our entry candlestick right there. And had we placed that trade there, let's see if we could have managed to actually avoid that loss. So we would have been risking about 15 pips, and the trade went in our direction about 18 pips. So we would have been at break even and we would have avoided that loss. So you see, it was just somewhat greed, if I may, because I remember it was on Friday. I didn't have a lot of trades this week. I think I was a little jumpy. That's why I took this trade and actually tried to gain as much return as I can. That's why I actually put a very tight stop loss. But at the end of the day, I shouldn't have done that. That's my bad. That's my bad. I should have let the trade breathe, kept my stop loss down here in order to gain this beautiful 1:3 trade, in which, had I done that, this trade wouldn't have been a loss, as I would have been at break even and I wouldn't have lost any money. So on Euro USD this week, that's what I've learned. That's what I'm looking to improve for the coming week in order to actually, make myself a better trader. So the first trade that remember was here. I lost 1.5. The second trade, I let about 2 hours go to waste. The third trade, I greedily, lost 1 hour. So with all that being said, I lost about 4.5 hours on Euro USD this week that I could have made. 4.5 hours. That means if I was risking 1%, I would have made 4.5. If I was risking 2%, I would have made 9% just on Euro USD, But at the end of the day, it is what it is. Trading is all about growing. It's all about evolving. So let's check out the other pairs. The other pair that I took trades on was CAD JPY. CAD JPY, where's the trade? Here it is. So we took this trade after prices bounced off a trend line. Third touch on a trend line, I was like, okay, cool. We need to look for, buying opportunities. We took a trade. Prices went in our favor very fast. We were risking about 17 pips. Prices went all the way about over 40 pips in our direction. That's over 2 hours. So at about 34 pips, somewhere down here, I told everybody to close the trade, get out, because we were approaching a support structure. And DXY, remember, on this day, it was on Monday, was also approaching a zone. So obviously it was being driven by the influence of another pair, because as you can see here, New York hadn't been opened yet. So I was like, okay, let's close this trade, and if there'll come another opportunity, we'll take it. So we closed the trade at 2 hours, and then we just secured that. This trade was obviously was properly managed, and we actually made the most out of what we could have made. So I don't really have anything to say about this one. It was properly taken, properly managed. It was a win. Nice one. So CAD JPY, ladies and gentlemen, that's what's up. We only got one trading opportunity on CAD JPY though. Oof, but this right here would have been another trading opportunity. I just didn't see it. See this? This was a consolidation, break, retest. This was a beautiful trade. This was a beautiful trade. I just didn't see it. I just did not see it. We could have made up approximately, yeah, it wasn't worth it. It wasn't even at least 1:3, so nah. Okay, so the last trades that we took were on Euro JPY. First trade was a losing trade, obviously right here. We took a buy After we saw prices broke above this structure, closed above those highs. So you see this was a break and retest on this structure, and then prices obviously pushed and closed above the high. So I was like, okay, so we need to see prices keep on pushing high. Unfortunately, prices came back here, gave us a retest, indicated as if they're pushing higher, but they didn't. Came back down here. So I was actually looking to see, will prices keep on pushing higher? So once I saw this structure here, I was like, okay, this hanging man, I was like, okay, prices have a possibility of to push higher. Unfortunately, the following candle just came in dumping. So once prices started dumping, while prices were about 3/4 before hitting the stop loss, I told everybody close the trade, exit, 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 exit. And then we managed to close with the trade before it fully hit the stop loss. So, we lost some money, but not a full percent, not a full R. So that was great management right there on Euro JPY. And the last trade that we took obviously was yesterday on Euro JPY. It was this beautiful baby right here. I'm exhausted, guys. I'm exhausted. I'm just doing this because I promised y'all, I gotta stay true to my word. Word is bond, Gotta be a man. Gotta be a man to it. Okay. So this was the last trade that we took. Obviously, we risked about 22 pips or something. Once prices were somewhere up here about 47, 50 pips, I told everybody to close the trade. We were about 4 point something hour, no, about 2 point something, about 2.2, 2.3. We closed the trade, and then the trade, kept on pushing higher about 70 something pips, 80, so about 3.5. So yeah, this trade obviously I closed because I don't really like trading on Fridays, and Fridays have never really been good to me. But recently I've been making some money on Friday. So I took this trade anyway to cover the first trade that I took on Euro USD. That was a loss. I was like, I can't close this trade day with a loss. So I had to take a trade to make it back, and this was it. So once it hit 2R, I was like, okay, I already made my loss and more profit, so I can actually close the trade and go in this weekend in peace. So I just closed my trade, but had I let it run, I would have made more money. So at least let it run until 3R before closing the trade. But I didn't do that, so I didn't let my winner run. And that's another lesson that I can learn from this trade, is that I have to let my winners run, because they're the ones that bring in the big bucks. They're the ones that make the home run, the Hail Mary. So next coming week, obviously I've learned my lessons this week. I had a winning week. I had a 6R return this week, but had I being a better trader, if I say that maybe, or if I manage my trades better, stick to my rules better, I would have made over how many? Like on Euro USD, I left on the table 4.5. On this trade here, I left 1R, so that means it's 5.5. I would have made over 11.5R this week. It's insane, but I made 6% instead of 11.5. But at the end of the day, a gain is a gain. As long as I came out profitable and then I've learned my lessons, guess what? Next week, I'll be sharper and I'm coming back stronger than ever. You don't want to miss out. So in case you don't want to miss out, join our free Telegram group that's linked in the description. Be sure to subscribe because you don't want to miss out on content and daily updates on the charts. Till then, I appreciate you all. Take it easy out there. Peace.